All right, welcome everybody. I'm going to hand over to Sean now. Yeah, let's see what he has to say. Please do ask questions along the way. Thanks so much.
Okay, cool. You guys can all see my screen. Just give us a thumbs up or an indication that you can see it. I can see it from my side. Jordan, I'm not quite sure how to get... Awesome. Thanks, Verena. Nice to see you here again. So, Jordan, I'm not quite sure how to get my video over the screen.
Perfect. What you're doing right now is perfect.
Okay, brilliant.
Perfect.
Cool, guys. I'm going to start out just very, very briefly on the charts, just looking at the levels that we've been trading at. And if you joined our last session, we looked at how to plot some of those support and resistance areas, how to... yeah, we looked at a couple of things. So the link I know is in the Telegram group. It's also on my YouTube channel. So if you're not familiar with my channel, I'm just going to give myself a quick shout out, if you don't mind, Jordan. So I'm known as Zara Trader Guy. Just do a search there. Actually, that was my last video there. So, Zara Trader Guy on YouTube. I do TA, and you can see there's our last session that we had on the Telegram group, how to buy crypto, and so on. Right, let's move on. BTC, we were looking at, let me just turn on my support and resistance levels. We can see from the 4th of December, we've been trading in this range here. And if I turn on my rectangle tool, we can draw support and resistance all the way there. So I've been trading in this range. And if I put on my 4-hour support and resistances, we've kind of been over the last couple of hours touching down to that 45,500 area, wicking up past this 4-hour resistance at 46,837. So not huge movement going on in the markets at the moment, and the US markets have just opened. I like to use this site called tradinghours.com. You can actually see when the different markets are opening, and generally when the different markets open, that's when liquidity comes into the market, and that's when you see volatility. So I was waiting for 5:30 our time, because that's when the New York Stock Exchange opens, but there wasn't too much movement. So maybe we're going to see some movement in Bitcoin and the other altcoins later on as the session progresses. So looking at Ethereum, we've at least had a bit of an uptrend there from the 29th of December, that trend line being respected very nicely. Sorry, my little boy is my bubby. Can you come say hello quickly? Come say hello. Say hello to everybody. Okay, quickly. Go with mommy. Sorry about that, guys. I've got a very inquisitive 5-year-old, and he's also learning to trade. When I open the charts, you can see when price is going up, you can see when price is going down. And whenever I do my videos, he asks me what makes price go up and what makes price go down. And we're going to talk about that as well today.
Yeah, I'll start him young, get it going.
That's it. By the time he's 18, he's not going to have to work. So Ethereum, we can see, I've seen over the last couple of 4-hour sessions, let's just get rid of that line there. We've had touches down to that $3,771 area, and it looks like we're forming a very nice support there. You can see they wicked down, very quick move up, wicked down a couple of times, and I think it was yesterday, we had a wick up to $3,892. So we're still facing some resistance there at that $3,900, and we've got a very strong resistance at $3,941. Still watching the chart. BitDAO has been extremely interesting. This has been moving very differently from Bitcoin and Ethereum. You can see the last couple of days. Let me just turn on my supports and resistances. You can see in the last couple of days from the 30th of December, we had a very big move up and a strong rejection there at that $2.18 level. and we came back down again today, and we hit wick down to $1.89.2. I am accumulating BIT, so on the inverse BIT perpetual, I actually entered a trade when I saw it was down here, because I think it's a very good level. And it's also here, you can see in the blue, a touch down to a daily support level, and it also corresponded with a lot of the fib levels, which I'll get into a little bit later. Okay, so yes.
I'll ask a question.
Yes, please.
How much of the
sorry, just repeat that.
How much of the BIT price action do you think was related to the Castor launch?
Very good question. I actually saw when the Castor launch happened, that's when there was a big drop and all of a sudden a very big pump. It could actually be because people were staking their BIT for Castor, taking their BIT, selling it, and maybe putting it into Castor, because that launch.
I would say what probably happened is that people took BIT, bought Castor, and then took profits on Castor straight back to BIT.
Absolutely.
Yeah, Jordan, I also think people bought BIT to stake, which pumped the price of BIT up before the launch, and then I think people are now going to start possibly moving out of BIT again.
I mean, if you think about it, even that launch allocation, actually, what it does is it transformed some of your BIT into Castor. So
yeah, absolutely.
I think, that happened for a lot of tokens. So I think that's probably just printed here perfectly for us in the charts.
Absolutely. Cool. Absolutely. I can see there's quite a few seasoned guys that have been doing some TA in the group, and maybe a couple of newbies. But I just wanted to really ask the question, and maybe one or two of you can unmute your mics and answer the question. Why do we see price going up, and why do we see price going down? Any takers?
Everyone's too shy.
Everybody's shy. Okay, I'm not going to pause too much. I'm going to open my little Word document, and I actually got
try. I'm thinking, what drives the price up is obviously when people are buying the asset.
Exactly.
They're adding, liquidity into the asset, and when they sell it, it brings the price down.
Exactly.
And obviously, if the supply gets altered, then that also will affect the price.
Correct. So basically, it's when a buyer and a seller agree on a price, and the two meet in the middle. And the price changes because of market forces. So in the market, we've got forces at the bottom here. We see this very, very, at the top here, where we see this price move down. We've got a lot of sellers coming into the market, and obviously that puts selling pressure, and it's a selling force which pushes the market down. So round about here at 189, a lot of people saw value again, and the buying forces coming into the market, and it pushed the price up. So it's the basics of supply and demand. If I go, just as an example, as a guy from Gauteng, I know if I go down to Cape Town in December, I'm going to pay more for certain things than you would do out of season. Why? Because there's a bigger demand. More people come into the city, more money's coming into the city, and people just push the prices up. Why? Because they can. So, and that's a very similar thing that happens in the markets. So that's where the order book comes into place, where we can actually look at the order book. We're going to look at it a little bit later on to see where there are big orders and to possibly preempt where the market is going to go. And there's a couple of tools that you can use for that. So I just want to look at my notes real quick. So we've got supply zones, demand zones, and if I look left on this chart on the 4 hour, we can see there's a very nice support area right here, and we came past that demand zone and hit another support area there on the daily. So that obviously right there is a very good demand zone. So if we see price going up and possibly coming down, wicking below that area, I know that from previous history, this, and you can see here also, there was very, very strong price action going up there. This is a very good demand zone. That's not to say price can't go down lower than this, but yeah, in terms of history, it is a very, very good place. Apologies, my little boy, I think, is more interested in trading than watching Paw Patrol. So what I'm going to do, I ask myself certain questions before I enter the trade. I ask myself, why am I entering this trade? Because often we see price going up at this point, and I could have entered here, which would have been the wrong thing to do because it's coming into resistance. So I ask myself, am I seeing confluence? Are fib levels giving me confluence with my support and resistance levels? Is there bullish and bearish divergences? So, and I think it's very important to look at the different types of traders. And if you haven't decided what kind of trader you are, you need to find the way to trade. And this does take some time to do, and it does take some losses as well. So I suggest if you're very new to derivatives trading, start out with $10, $20, $30 in your account, an amount of money that you can lose, and practice at this, because the more you practice, the better you get. And I can guarantee you, in the first couple of months, you're going to lose your capital. So the best way still to make money, is to buy on spot and dollar cost average down. So quickly, 5 main types of trading.
Just quickly, I have a little checklist that I use before I enter a trade, and you'll see that it actually all does relate in the end to your trading plan. So at the end of the day, it's best to have a main trading strategy, you know, and yeah, like you said, dollar cost average into spot, and then you have a separate leverage trading strategy. And yeah, let me just quickly go through my checks. There's 7 of them, and the first one is the market trending or ranging. So is it in a strong uptrend, or is it within a range? And then is there a significant level of support or resistance nearby? So have we recently come to a support or resistance level, or are we heading towards one? And then is the trade confirmed by an indicator? So are there divergences, or are there indicators showing me that this is an opportunity? And then what is the risk to reward ratio? That's when I'd go look at the ratio. And then I think about how much capital am I risking? So how much am I willing to lose? And then are there any significant economic releases? So like, you know, what's happening in the media, just take a quick look at that. And then am I following my trading plan personally? And then I go and I smash the trade.
So I quickly opened up my trading rules. We should be looking at our rules every single day and every time or before we enter the trade, so that when you look at it over and over every single day for 6 months, you've got those things solidified in your mind. Why do we do this?
Exactly.
We do this because we see the market pumping, we forget about our rules, go in, and you end up losing money. So it's important to create your rules, and these are here. You can look at them later. You're quite welcome to actually go and copy these. So I'm glad you spoke about the states, and I see all of a sudden the screens have changed. Jordan, can you see the screens change?
Stop sharing your screen and then reshare and try just share. See what's happened. Give me 1 sec.
Okay. Looks like we've got somebody else that might have.
There we go. Perfect.
Okay, cool. So you can see 4 stages, and Jordan, you referred to that as well. Is the market ranging? Is it trending? Is it reversing? Is it breaking out? And at the moment, the market is ranging. So there's a certain way that you'll trade that. And I look at these rules quite often, and one of the biggest thing is kill the noise for me. So I don't like to look at news before I start trading. I don't look at any other YouTubers. I don't look at anything else on Telegram. And I look at the clean charts, and I look at what are the charts telling me. So let me close that real quick.
That also speaks to using just a few indicators, the indicators that you find that you like. You know, instead of having 10 different indicators, it's very noisy and it becomes very confusing. I mean, at the moment, 100%. I'm just using 3 indicators, and they work together to find confluence. Keeps 100%. It simple.
So what happens to a lot of new traders is they start opening their charts. They see their support and resistance areas. They opened up a whole bunch of indicators, and I know I've got a bunch of indicators here, but I solely use these for spotting divergences. You look at the indicators and they're telling you different things, and it ends up causing so much confusion. So the idea is to have a simple strategy and find a strategy that works for you. And Werner said it in the chat today. Backtest your strategy. Go and look back on the trades and see if those strategies have worked in the past. If they're going to work in the past, the likelihood is that they're going to work in the future. So very quickly, five main types of trading. Scalping taking small profits repeatedly. It trades from seconds to minutes, and Werner is that kind of trader. Attempts to make many small profits on small price changes. This type of trader will place 10 to hundreds of trades in a day. This takes immense skill and discipline and is not recommended for a beginner. So if you see a YouTuber telling you, I made $100, $800 within 5 minutes, move on. Wait till you've started trading and you've become profitable in your spot trades and maybe small leverage swing trades or position trades, then you can look at scalping. Second way of trading, day trading. And it's all about buying and selling on the same day without holding positions overnight, and trades held for minutes up to hours. A day trader closes out all the trades before the market closes, and day trading is often glamorized as an easy way to get rich quickly, but this is rarely the case. Both scalping and day trading need strong discipline. So for beginners, what I would recommend is swing trading and position trading, and I'm going to get into that. The next type of trading is momentum trading, where you identify breakouts and jumping on to capture as much of the momentum on the way up or down as possible, and it focuses on pairs that are moving significantly in one direction on high volume. Trades last for several hours or days. In crypto, this can also be minutes, because in crypto you can see price retrace 20% very, very easily within minutes. So you've got to be careful with this and make sure you set your stop losses very, very nicely and don't lose money. So these two, swing trading and position trading, is what I recommend for newer people. If you're wanting to try out leverage trade, as I said, use a small amount of capital that you're willing to lose, test it on a lower leverage. Remember also, if you are leveraging 50x, you've got to make sure that price is not going to retrace 2%. So if you take that 50x and divide by 100, that will give you the amount or the percentage that price has to move before you get liquidated. So even at 20x leverage, divide that by 20, it gives you 5% that price has to move before you get liquidated. So start low, trade on 1x, 2x, experiment with it. So swing trading captures a short-term trend, and it captures gains within 1 to 7 days. Traders use technical analysis like chart patterns, support and resistance. Intraday moves don't affect swing traders as much as day traders. Their TP goal is on a longer time frame. And this position traders stay in trades for weeks to months, and it anticipates if the current trend will continue for a much longer term than a momentum or swing trade. Position trading gives traders who can't frequently trade a lot of freedom. Long-term traders aren't concerned by short-term fluctuations. And you can see there, for beginners, swing trading and position trading are the best way to make money, as it doesn't require you to be at the charts all the time. Okay, so I'm going to just tell you what my strategy, my ranging strategy, has been over the last while. And again, I referred to this in the last stream. Chart champions refer to this quite a lot, and it's called trading a swing failure pattern. So a swing failure pattern is basically charting your support and resistances and seeing when price comes close to that point or breaks through a previous high. You can see right here, if I turn on my brush tool, right here on the 27th of December, we actually had a huge swing failure pattern on the 4-hour. It broke that previous high, and what happened is that it came and closed below that previous high. And we had a very bearish candle. That's a shooting star candle. So what you can do, obviously hindsight is 2020. So looking at the charts in hindsight, it's easy to see, oh, okay, that was very bearish, and we had price breakdown all the way down past that daily support. So while you're in that trade, it's a lot more difficult to see. And what I'm going to attempt to do is break down the process that I follow to give you high probability trades. So I try and look at least 3 to 4 areas of confluence before I enter a trade, and that for me makes a good trade. So let's look at this on the 15-minute time.
For the beginners, I think what Sean is referring to when he says confluence is when more than one indicator is giving you the same reading, that a trend is reversing or that a swing failure pattern is happening, so that you have more of an understanding and you feel actually more supported and stronger going into a certain position. And I mean, that's one of the main things. Always play from a position of power. You need to feel powerful. If you're scared to enter a trade, then don't enter it. You need to feel, wow, I've got so much supporting me. I've got so much info backing, this decision. And that's when it works out.
100%. There's a saying that goes that not entering a trade is also taking a position. So our primary goal as traders is to preserve your capital, because so often, the saying goes that beginner traders lose 90% of their accounts within 30 days starting trading, and especially with derivatives and leverage trading. So not entering a position and waiting is also not a bad thing. So don't knock yourself out for not entering a position or missing a position. And this is one thing that I've learned as well. In the beginning, I used to think, oh man, I missed the trade, kick myself, and I get FOMO and enter into a trade that ends up being a losing trade. So you've got to realize that the market is of the nature that it gives opportunities over and over and over.
Are you actually, by not entering those trades, I remember, I think it was the Moon a while ago, he said an analogy that has stuck with me. He said, you don't want to try get onto a moving train. Basically, once a trade has taken off from the station, that train has left the station. If you're going to try hop on, what he says is you're probably going to land on the tracks.
Correct. And there's a saying that I've seen in our Telegram chat, don't try and catch a falling knife. What does that mean? When the trend is going down and all of a sudden you try and enter a trade here, there's a possibility it gets to a support level and reverses on you. So make sure that you wait, and sometimes even wait, like when it came down to these levels, you can see it was respected there. That's a very well respected level. But if Bitcoin comes down and touches, then I enter the trade immediately because I think price is going to bounce. That might not be wisdom. For me, I would rather wait for a bullish hammer candle to form on the 15-minute time frame and then make an entry. So I'm going to go back to...
And honestly, the FOMO is actually really sad, because being in the market for however many years now, like, there's always another trade around the corner. The market's not 100%. Going anywhere. If you just rather sit and wait for that better position, you'll be far better off than trying to jump on late signals.
100%. So there you can see there's that candle that I circled on the 4-hour, and if we look at it on a 15-minute time frame, we can see that there was a bullish price action moving into there, and all of a sudden we had the previous high broken. And why this is important is because if you look at the chart in hindsight, there's a high that's almost on par with this high. Okay, a little bit higher. But what will happen is people will place their stop losses on a short just above this area, or they'll place their stop loss just above this very big daily support. So what happens is price will come, take out those stop losses, and it will wick down. So that will provide liquidity in the market for the price then to go down. So, and what's also very interesting here is that although this, let me just enlarge it there, although this candle wicked up beyond the previous high, it came and closed, you can see here, below that previous high. Can you see that line there? And that's very, very important. That is called a swing failure pattern. Now, is that reason enough to enter this trade? Possibly if you're a risky trader, but you can also find other areas of confluence. And the first that I'm going to look at, let me just click on there, is to look at bullish and bearish divergences. My apologies, I've got three very busy boys, so I can identify with Werner. So the first thing we look at over here, we come into, and immediately I can see bearish divergence there. So the bearish divergence means that price, you can see from this point, has made a higher low, but on this Wu Manchu cipher B, you can see there, it's actually made a lower high. Okay, you can't really see it on the RSI on the 15-minute, but that indicator normally is quite accurate. So awesome oscillator also gives you, yeah, and we can see there's a slight bearish divergence there. So yeah, price is kind of going down slightly. Let's actually enlarge that so that you can see that more accurately. And the way that you enlarge these indicators at the bottom is just by double clicking on them. So if I double click that again, you can see it just throws it back down to the bottom of my chart. If I look at the stochastic RSI, also bearish divergence. So that would have been a second reason apart from that swing failure pattern to enter the trade. So number one reason to enter the trade, swing failure pattern. Number two reason to enter the trade, bearish divergence. Now, I'm going to show you another way, and this is a little bit more of a complicated way. So I would suggest you go and look at how to draw fib retracements and fib retracements to see where your support levels are. And okay, let's click that auto button.
This is
like I did the other day.
Start playing around with. It's quite magical, and yeah,
it's incredible.
I mean, it helped me a lot as soon as I learned about it. And I mean, yeah, we still, don't really know exactly why those levels are held, but I mean, it's interesting. It's working on the Fibonacci sequence, which is kind of the golden ratio. So, how things work in life at the end of the day, where those confluence points are kind of run by this weird ratio, and the Fibonacci sequence kind of lays that out. It's amazing.
Absolutely incredible. So I actually found or heard a reason why these fib levels get respected so nicely. And I actually started out my trading journey. One of the things I did was trading on bots. And the guys that made the software available was saying the reason why a lot of these levels are respected is because a lot of really big bots, institutional bots, trade these levels. So what you do on your chart, just below your trend line, you can see there fib retracement. So you select that tool. And what you can do is I'm going to pull it from this high to the low. You can see that you always pull it to the ends of the wicks and the beginning of the wicks. So let me pull that a little bit across. And let me switch off this level there. So what I like to do, I'm going to go to my settings. So if you look at the stream again, you can go and look at the settings. I like to use this golden, it's called the golden pocket. So when price retraces to that golden pocket, there's a big likelihood of a reversal. Also this 0.5 and 0.38 fib levels. So what I like to do, flying around. So you can just copy those settings and you can, okay, the visibility and the coordinates don't really matter. So you can copy those settings in terms of
the users understand. The one thing that got me at first drawing the fib retracements and extensions is where to draw them from, where to find that swing high and swing low to draw that extension from. So if you could just go through that again. Thanks.
Correct. So there's various levels that you can draw this from, but basically we look at the range. So the top of this current range from the 4th of December is right there from that wick. And I can also draw it from there and possibly to there, which will give you other levels to trade. So, but at the moment, these levels are very relevant. So I won't go and just draw this fib retracement on my chart. To give an example, I'll go on a higher time frame, maybe select the daily, and I'll see Let me just turn off that fib retracement. I'm going to draw a retracement from the all-time high to that wick down on the 4th of December. So there I can actually see what my resistance levels are going to be on a longer time frame. So you can see once price gets to that $50,000 level, that is, by the way, a major level. If I go and turn on my supports,
that is so amazing to look at how, I mean, you can see exactly how it's respecting.
It's incredible. It's incredible. There we've got a weekly level at 50,700, and you can see that fib is very, very close to that. We've got a monthly level there.
Maybe even if you bring it slightly back, you might line up a lot of those levels. So you can even just play with it slightly and see, you know, where you get it, where all those levels are lining up.
Correct.
Yeah,
so
I like that,
if I come to there, that's the original one that I drew, and you can see that golden pocket is right on a daily level, and we on the 27th of December we had a wick right up to that 66% level and the daily level, and we wicked down. You cannot believe how many times these fib levels are actually respected. So you use these fib levels together with your divergence, your swing failure pattern, and your support and resistance levels to find your entries. Now, that's how to find your resistances. You draw from the top of the swing high to the bottom of the swing low. The way that you find support is drawing from the low to the high. So I'm going to use exactly the same tool and take it from that wick there, and I'm going to draw it to that level. Let me just turn off that level, and you can see there on the 0.5 or the 50%, it's come down and retraced nicely, and we've had a bounce there. Let me actually turn it on to a 4-hour level so you can see how it respects that level. It's absolutely incredible. So I can actually draw these again. If I take this level, I'm going to redraw it so that there's no confusion. Let me switch that off. So I can actually draw this from our range swing low over here to the swing high. Okay, but that takes me past our current trading levels. So that is going to be useless until price is actually going to come up and possibly find support at these levels and move up. Okay, Desmond, not Desmond, Jordan, anything you want to add there? Anything that I might have missed?
Well, it's interesting there. I mean, obviously what you're using it as there is a fib retracement, but I have seen it used. I know the Russian Bybit community uses fib extension quite a lot. So instead of, looking back within the range to see where the failures are going to be or where the lines are going to be, they actually use it to extend further into price discovery.
Correct. To see where the price targets will be when the price actually breaks out. So you can also, like on the daily time frame, take the fib from the low there at 29,000 that was in July and draw it all the way up to the all-time high. And would you look at that? That is exactly where price wicked down to on the 4th of December.
Yeah, exactly.
Incredible. Absolutely incredible. And the second thing that I can see here is that this 50% level, look at our range. So if I'm drawn,
yeah, when I look, I can't believe it because, so I mean, what you're saying with the bots makes sense. There must be a lot of bots that just know that these levels are good and just end up flocking because that wick comes down like to the dollar where, that point
it's
is
pinpointed. Absolutely
what else
pinpointed.
is going to give us that point?
Exactly. So let's say, for instance, up until this point, I only had the Bitcoin all-time high, okay, which was that 69,000 area. And I had none of this chart. I could have drawn my fib level from that swing low to that swing high and predicted that price was going to come down to some of these levels. There you can see, respected there, respected there, and respected there.
First bit of the dip. So during the first half of that crash, we could have been using that fib extension to see basically. I mean, that dip trade would have been huge. You entered a short around 59 and took profits, at the 40,000 level.
That would have been absolutely incredible. So I don't have any of my supports or resistances drawn above there because we don't have too much data. Actually, we've got a daily level kind of in this area. So I could have seen that this was, well, at that point, you didn't know if it was going to be a support or resistance because price was in discovery mode. So in other words, if we look left on the chart, we've got no data at this level. So it was a very, very difficult thing to do. And what a lot of people did.
I mean, when there's no data, it could just, into that price discovery zone. But you have to wait. You can see that it's a swing failure at the top there with those big wicks.
Correct. And if you looked at it on the 15-minute chart, let's just circle that, you are likely to see that there was a swing failure pattern there. So let's just move left there. Sorry about that. Always forget to turn off that brush tool. So where are we? Okay, there it is.
Time rejection.
And you can see there already that there is a rejection candle there, right there. And exactly as you said, Jordan, swing failure. So it took out.
People must have opened that swing failure.
Absolutely. It took out the previous high and a strong rejection on the 15-minute range for an hour or a couple of hours, maybe 3 or 4 hours, and a strong rejection down. So, and the same goes for entering trades on the long side. So the opposite of that is you would look for a, let me just reset this chart. So it goes to
that support basically.
Correct. So if I look at, let me just see these areas. I'm just going to look for a hammer candle. So it's very, very important with the swing failure pattern that you only enter a short when there is a shooting star candle and it's taken out the high, and on support where there's been a hammer candle, because those are extremely bearish and bullish candles. So let me go and have a look there. You might actually see a hammer candle here on the 5-minute. Okay, I'm not finding one.
Yeah, it's very nice to know what they look like. The bullish and bearish. Big reading as a whole.
That's very similar to a hammer candle, but that is in the 5-minute time frame. Hammer candle would have the body of the candle a little bit higher there. So let me just scroll past there on the 15-minute and see.
Your rule of thumb, you're looking for a decent amount,
there's a hammer candle.
Third with an actual candle color, and then a big wick, and either the big wick to the bottom or the top is obviously indicative of being bought.
So this here is a very nice hammer candle. I would have liked to have seen that body of the candle a little bit higher, but that indicates bullish price action. So even though this didn't take out a previous low, you can see after that hammer candle we came down a little bit, and all of a sudden we had a big pump up to the upside. Okay, well, not huge, but we went from 46,800 all the way to 47,800.
But also, it's a very low time frame. If you find a hammer candle like that on the daily or the weekly or the monthly, it can be a big predictor.
Correct. And those are also very good places to buy on spot if you're averaging down. So all of these principles don't only work for leverage trades, so they also work for entering trades and on spot. So very, very important to dollar cost average down, because we know in the long run Bitcoin is bullish. Whether it's going to hit 100,000 in the next 3 months or the next 3 years, we know it's going to hit that. But the point is of being a trader is to be patient so that you hold on to those spot buys so that when it comes into profit, then you can sell. So a lot of the traders that you see in the group, myself included, I don't just do leverage trades. A lot of my portfolio is actually bought on spot. So, and I'm sure, Jordan, you do that. There's certain coins that you buy on spot, and there's certain to hold, and there's certain coins that you like to trade on leverage. So that I know that I've got a couple of
definitely the
favorites
place to spot. You need to kind of have your spot pretty mastered, you know, making solid profits in spot before you move into leverage, because basically spot is a 1x leverage trade. You know, as soon as you start going 2x, 3x, you're basically doubling, tripling the risk, you know. So as soon as you get 100 times the risk, and spot's a wonderful place to start. I mean, I must say it's relatively easy to make profits in spot. You look at the charts,
100%.
you see where the resistance and the support is, you make buys, you make sales within ranges, and you feel more confident. And I must say, I mean, you get it right, and you understand that it takes time. You know, you make a spot buy and you sit back and you say, well, I've got to wait a week, I've got to wait a month. And you need to be good at that. It's easy to jump into leverage trading and have this very, I just want to open trades. You know, I've got this money sitting around, I just want to trade. But yeah, over time you realize, as we've said, you know, capital preservation is number one, and actually sitting back and targeting those moments.
100%. So after I traded with bots and I got liquidated a couple of times, I thought the risk to reward ratio is not great. So I started buying on spot, started experimenting with leverage, lost money on leverage, and decided for a couple of months, I'm only buying on spot, buy at support and sell when it's higher. And you know what? If I made $20 profit, $30, sometimes $10, $100, I made a profit. At least I was getting some wins.
There's so much volatility. So, I mean, it's simple. All you have to keep in mind is the number that you bought at. And as long as you sell higher than that, it's cool. Or the number that you bought at, you know, or the number that you sold at, as long as you buy higher than that, it's cool. You need
100%.
to
keep a basic spreadsheet. If you're buying on spot, it's easy to put the amount that you bought at on spot and say you bought at this date, you bought this amount, this is what the coin is that you bought, and then when you sold it, then you just sell it higher, and you can see what your profit is. Obviously, Excel spreadsheets are great in terms of calculating that. Okay, so
often it's just a matter of being patient with spot. I mean, as we know, it's going up. So if you're buying in, if you're longing basically by buying spot, a lot of the time what you have to do is actually just leave it there. Whether it's in and out of bull cycles, bear markets, just leave it there. I mean, if you buy pretty much any of the top 40 projects on CoinMarketCap and leave it for the next 2 or 3 years, I mean, on there are projects that are going to be revolutionary. I mean, you can't really go wrong, even if some of those projects in the top 40 that you do buy go to zero. The amount of profits that you'll make on the amazing ones, I mean, yeah, I've seen it happen. Someone opening a wallet, buying a bunch of coins that they've been advised to buy, so like the top 40 coins that they think are going to do well, leave it for 3 years, and I mean, it's ridiculous. It's about 50x, 100x. It's beautiful.
100%. You know, that is so true, because if I think of when I first got into crypto, that was August 2020, Bitcoin was sitting at something stupid like $6,000 or $8,000. BNB was something like $12. And I bought it at the time and I thought, this is never going to go up. Saw the price going down and I sold. So if I just held on to that, I would have doubled, tripled, quadrupled my money. So that's a
look
very
at
good
that.
strategy.
I mean, I do think that BIT is going to go along a similar path. You know, Bybit is going to have a similar roadmap that Binance has been on. So, geez, yeah, holding BIT. I mean, we're looking at, what is that? I mean, it's quite a decent increase to get up to where Binance is now, even. But yeah, I think 100%. Binance is somewhere around $500. It's amazing.
500, 550, right about there. Yeah, absolutely. So, you know, you can use also a very nice tool. I'm going to just pull this screen across. This is on the Bybit screen. If you a kind of trader that likes to dollar cost average, in other words, get an entry and average down, you can do this with spot as well. There is a calculator. So you can do it on your cell phone as well. But right there is a calculator. So if I go and click on entry price, let me just stop that from moving. Let's say, for instance, on ETH USDT, my entry price is 3,794, and I Okay, so I'm going to say maybe $600. And what happens is that price all of a sudden goes and retraces right down to this $3,625 level, which is a very strong area of support. Let's say I then go, let me open that screen up again. I want to see what my average entry is going to be. So 3,625, and I add another $600. There you can see my average entry price has changed from 3,794 to 3,709. So it's a very nice tool to use even if you're buying on spot, so that you can see what your average entry is. So if you're dollar costing into Ethereum just on spot, or Bitcoin just on spot, you can see what your average entry is, so that in the long run, you can see, okay, my average entry is, I've bought on every single dip. This is what my profit is going to be when the price goes to 5,000 on Ethereum or 80,000 on Bitcoin. So just a little added extra thing there. Okay. Next, I want to look at the RSI. That's another tool that I like to use to see where the price is. And you can quite often go on the daily time frame. So apart from seeing bullish and bearish divergence, if price has retraced down to this 2930 area. Okay, actually, let me just close all of these others so that you can see nicely what's going on here. My apologies, guys. I've now gone in. Okay, so.
Sure. Can you make that chart full screen? I think some people are just struggling to see the details.
Let me just see. I can see the screens are split, but I'm actually not sure how to.
No, that's good.
You're talking about
on
my chart
at the top of your TradingView at the right. Yeah, I think you can full screen that chart right next to the settings or publish. Yeah, there on the left.
Oh, there it is. Okay, gotcha.
Beautiful.
Okay.
Thank you.
So you can see on this chart that when Bitcoin reaches oversold territories or overbought territories, sometimes it's a good time to sell. But let me just take that out of full screen and change it to a weekly chart, because we'll be able to see that a lot better. And indicators. You can see here that we've had bearish divergence, and when this RSI on the weekly was at 86, close to 90, that's when you know that's time to sell, especially on the weekly time frame. So I'm saying to people, once we get bullish moves and Bitcoin moving above the all-time highs, this is one of the charts that you can look at to see where to sell. So you can also use it on the smaller time frames for ranging, but yeah, this was a very, very good area of confluence. We had bearish divergence on the RSI, and it was in overbought territory. So if we look at the Bitcoin chart, from there we had a very, very big wick down. Sorry, that's ETH, not Bitcoin, my apologies. We had a very big wick down from 3,792 all the way down to 1,744. That is a big price difference. That's almost 50%. So what I want to look at, we've got about 10 minutes left. I want to look at the order book and how you can see the order book. So there's 3 different tools that you can use. And the first is a website called cryptometer.io. And there it is. And there's a couple of very, very nice tools on this website. The very first is that you can look at your volume flow. You can actually see the USD has flowed into BTC. And let me just make that screen a little bit bigger. I think you'll be able to see better. It's flowed into BTC, and then it's flowed into ETH, from Euro, USD. It's just an interesting thing to see, to visually see where the money has flowed. The other one that you can look at is the heat map. Just to give you a nice visual
really
presentation.
Cool. to see how much was going out of Bitcoin into Solana and Avalanche.
Absolutely.
Crazy.
So it actually helps you to look for coins where there's high liquidity and possible high volume and trade those. So if I hold down my control key and I scroll, then I can scroll in and out of that chart. It just also just shows you where, excuse me, I've zoomed out a little bit too far. My apologies. It's a nice visual presentation of where the coins and where the liquidity and where the majority of the trades are happening. There you can see Bitcoin still the largest, and if you hover over it, it gives you all of the smaller details, like what market cap is, the volume has been. You can see 2.7 billion. ETH is still number 2, and there's BNB at $512. So the interesting thing I want to show you about the order book here is if we hover over exchanges and we go to Bybit, we can then look at the pairs. And it seems like on this site, we've only got the inverse USDT pairs over here. But let's look at the BTC USDT or BTC USD. And it gives you a whole bunch of data. But what I'm interested in is a little bit lower. You can see there just below the chart, there's a live order book. So quite often, the order book that you see on Bybit, you see the buys coming in, the sells coming in, but it's very difficult to see where the big buys are to see if the market is going to move or not. So I've clicked on the live order book, and this is the representation of the live order book. You can see here 1,820,000 Bitcoin there is being bought at 46,351, 2,000,007. Okay, and it changes very, very quickly at 46,300. And this little chart will actually show you the buy quantity and the sell quantity. And what I like to do when I use the site, if you scroll down, those big areas of green is where the big buys happen. And you scroll lower down, you can see there's a very big order block. And if I scroll lower down and you wait, sometimes you see the huge whale orders being put into the order book. And now this is not always an indication of where whales are going to buy and sell, because often what happens is these big institutional buyers put in spoof orders. So they put it in there so they think, oh, this is a good place to buy. And at the last moment, they remove that order and price shoots down way below that. The second tool that you can use is coinalyze.net. I think we chatted about this on the last stream. So you can see if you add the indicator, just click on indicators, buy and sell volume. You can put that in. There's a second one that goes in. Let me remove that one there. And if I hover, let's change it to a 15-minute chart. If I hover over this area, then we can see what the buy and sell volume is there. So often it's difficult to see for every 15 minutes, and the yellow is the what's called the delta. So if I hover over it, you can see the buy volume is more than the sell volume. So the delta there's a difference of 516 volume over there, buy sell volume. So the buy volume is more than the sell volume. So this is that cumulative volume delta line. If that cumulative volume delta line is going up, it means that there's normally pressure going up, but we can see, or it will push price up. We can see there's a little bit of down pressure that's come in. So as I said as well, you can use liquidation data. I can put on longs liquidation, shorts liquidations, and that will also give you an indication. So when there's been a short liquidation, people have gone short, obviously, and they've shorted into the wrong place, and they got liquidated, and their sell orders come back into the market as a buy order, and that pushes the price up, which is that wick that you see there. Another tool that I like to use is a program called Bookmap, and this is, all of these tools are free. You don't have to pay for them, so you can actually see what's going on in the order book very, very nicely. So this one does, you need to go to bookmap.com. Let me just wait for it to load. You've got to go to bookmap.com. and you've got to add the charts that you are wanting to trade. Let me just close these. So it is a biggish program. So if your computer doesn't have a lot of RAM or processing power, it can struggle to run. So the free version of this will give you one instrument that you can put onto your charts. So here you can see this is a live representation of the ETH USD inverse order book on Bybit. So my screen is lagging a little bit. Is it okay on your side, Jordan?
Yeah, just take it slow because your audio is lagging slightly.
Okay. I'm just going to close these.
Really interesting looking visual there. Curious to know how that works. It's so interesting to think about liquidations in a visual form like this.
Yeah, exactly. So I'm just going to close everything else on my computer because this program is extremely resource hungry. So you can actually see that you've got your CVD or cumulative volume delta. And quite often I'll look at the charts, see if I've had a swing failure pattern, see if I've had a bullish or bearish candle developing on the 15-minute, see if I've had bearish divergence, see where my RSI is, and look at these order books. If I see big orders coming in and there's a lot of activity, and I can see from looking at this previously that this order book is extremely slow at the moment. We don't have a lot of movement. And you can see by these red heat maps, if I hover over it, there's been sales at $3,802, and that volume is 93,336 ETH or USDT. I'm actually not sure what that is. But you can also go to Bookmap on YouTube, and they give explanations on how the software works. Looking below where the current price is, we've got some orders there, and I can actually go and minimize that a little bit further to see if there's orders higher up. And we can see there's some activity at 3,816. But at the moment, this order book is looking very, very quiet. So what's nice is that if I scroll in and make this chart a little bit smaller, it's just a little bit slow at the moment, my cumulative volume delta is in a negative, which means that in the smaller time frame, the price is probably going to move down. And you can see these are big sells, these big red circles, and these big green circles are buys. So this tool I really like to use when the market is really moving, especially to see this cumulative volume delta change from a negative to a positive. When I get all of those confirmations and this changes to a positive, that for me is a very good place to enter the trade, because especially on a long, the price is going to move up. So that is basically me. So I think let's open up the chat to some questions. If anybody's got some questions.
Yeah, wow, that was a nice amount of information. Thank you.
Yeah, and this, you can present this kind of information in an hour, but guys, I encourage you to really just take time and look at this video again slowly and pause it, and things you don't understand, go and look for information on divergences, on swing failure patterns, on the order book and that kind of thing. That's how you're going to increase your knowledge. Try and read something about crypto or trading or the charts every single day. Try and do charting every single day.
Even
And
just
the
read
more
our
you do
chats, all the news we share, go and actually read the tweets, look at the links, stay up to date
100%.
with what's happening in the space. Because, I mean, a lot of the time things are getting launched, like today, whatever, when things get launched, they go up and down. But at the end of the day, it's a project, and if you believe in the project, you want to add a little bit to your bag. You want to be aware of what's going on. And every Launchpad project that's been on Bybit for the past 6 months, I've actually bought some of, and they're all in profit now. All of those buys of all the Launchpad projects, never mind what happened, within that first day, people buying and selling, or that first month. If you actually do
100%.
like the projects, and what's interesting is most of those Launchpad projects, Bybit's not going to go and, promote something on their launchpad that they don't believe in. And I mean, they are
100%.
obviously very skilled developers. So it takes a lot to impress them. So if
100%.
something's on that launchpad, I would say go buy some, add it to your bag, kind of just forget about it and, hodl for the long term.
Well, to give an example, Jordan, I bought Bico when it launched. I managed to buy, I think it was at $1.61, and I sold it the same day at $3. So I doubled my money. Pico, or PTU, USDT was exactly the same. So there's a lot of these coins if you buy in early, and BIT was one of them. I bought at $1.49 within the first couple of days of it launching. I could have bought lower, but it's at the moment BIT is sitting just under $2, and it's going to go higher and higher. So that also is a very good strategy. Buy the newer coins when they have lower value, and not a lot of people have seen them, because eventually when we go into a full-on bull market, those little altcoins are going to skyrocket, and you'll make a lot of money on them.
Yeah, the lower market cap coins. So basically the coins where there has been very little historical buy and sell action. There's, obviously huge room for increases. Today was kind of an exception.
100%.
Usually you don't get a 50x or something like that. But yeah,
Yes.
today it went from 4 cents to straight up to $1 and then up to $2, and now it's back around 1.14. And you can make money if you watch it closely. Today I managed to buy, there was glitches in the platform, but managed to buy at about 80 cents, again at 90 cents, and then I managed to sell at $2, sold half at $2, and then I bought that back in again at $1. So I made such a nice increase.
That's
and
incredible.
I'm just holding that, because Custer, who knows what they're going to do. They have a lot of promises. And some of these promises, I'm like, what? That's very brave to.
Let's do the math on that. I always like to calculate these things. If I was lucky enough to get in at, let's say, 30 cents, and I bought $100 worth. Yeah. $100, that means I got 30 Custer. Okay. So if then I sold at $3 and times 30 Custer, no, I did something wrong there. What did I do?
John, you must take $100 divided by 30 cents.
That's it. Thanks, Bru. I've been talking a long time, and maths wasn't my strong point. That's why I became a photographer. But I'm learning to become good at maths.
That's why I'm a scalper, because I can do it from my head.
So what you said, 100 times
divided by 0.3.
Thank you. My brain's a little bit frazzled at the moment. Divided by 0.3. Okay, so that will given us 333 Custer. So 333 times $3. Sure, you would have turned your.
See a balance that's actually numbers. We're buying Ethereum, we're buying Bitcoin, we're buying Solana. Even to buy one Solana or one Avalanche, you have to spend, one BNB. Like you have to spend $500 to be able to buy a coin. And I did this with ADA too. You buy a coin and you're actually able to see 1,000 or 2,000. Well, that makes you a whale, as long as you can just, they say, have the diamond hands. So diamonds are created over a long period of time. And that's what they're saying with these coins, that if you have diamond hands, you hold strong, you don't sell, that 999 Custer can be worth, say, $500 each. And then you're looking at life-changing investment, taking profits.
So give an example. I think it was December last year. I staked on a DEX, and I had to use ETH to stake. And at that time, ETH was $700. So I think I staked about $150, and at the moment it's worth $600 or $700. So patience by far is the best strategy. Buy on spot, hold and sell, and while you're doing that, use a small amount of your portfolio to practice the leverage trades so that you can become more successful. Because realistically, as I said, I've been in this about a year and a half. Realistically, I'm looking at this for me to become really profitable, to become a full-time trader as a 2 to 5 year journey. Maybe we can ask Werner, he's a full-time trader. How long did it take you to become profitable?
Well, Sean, I started off in crypto in about, I think that was around 2017, 2018. My first year I was still fully employed, and I became full-time trader January 2021. And ever
Sure.
since I've been profitable. So yeah, you can say I fooled around for about a year and a half. But I went straight into high leverage trading altogether.
Okay.
Because I've been trading financial markets since 2006.
Okay, so that's the difference.
Yeah, CFD trading on the JSE, on the local burst, you know. So I know the risk and I know all of those things. But yeah, I just tuned in today, to be honest with you, just to see how you guys actually manage the mechanisms of spot trading and things like that, because I simply don't have the patience. I'm honest with you. I don't.
Well, you're making good money, buddy. So stick to a strategy that works.
Put in the work. I mean, it's obviously quite similar to trading stocks, just more volatile, and maybe you can't predict as much. But from a scalping point of view, if you look at that, I mean, you've got 15 years experience.
Yeah, you know what, Jordan? To be honest with you, the way I'm doing it, I don't have to predict. Dick, sorry for the chicks, but I don't have to predict anything. I just use my indicators and I just wait for my entries. It's as simple as it is. But yeah, you know what? For the new guys, it's really to go on full on high leverage trading. For example, you need to learn it. You need to learn the skill. And I think what 100%. Sean emphasized a lot here today is to start off small and just to take it day by day, you know, because if you're just going to hop in with your life savings into high leverage trading, you're going to see yours. I promise you. You're probably going to lose everything rather quickly.
Laid out in our profit planner was literally 3 to 5% of your entire holdings, your spot portfolio, even your USDT. 3 to 5% is what you can play with, and you can say you give yourself maybe that for a month. I'm going to use 3% of my holdings, and yeah, that's where the fun is at with leverage. But like the three of us are saying, I mean, I also went into huge debt before I had to make that back up in profit. In my my leverage trading portfolio. Luckily, I had this information before, and all of that leverage debt that was occurring was only 3% of my entire portfolio per month. And then at the end of the day, it makes that a lot easier to pull back. And once you are at the level where you're taking 3% of your portfolio a month and turning it into 10 or 15% and putting it back, that's when you start saying, oh, okay, now I see a trade that's confluent with many things. I'm going to, take $1,000 and I'm going to put it on a 3x leverage and maybe see what happens. And yeah, it takes patience, I think, is the main thing. Commitment, as with anything 100%. In life, passion, patience, commitment.
Do you know what is the big thing, Jordan, is if once you start off this journey, and mostly to the new guys, you have to calculate yourself like a compound strategy, all right? So let's say, for example, you start off with $100, okay? And you don't go into a trade with more than $5 at a time. Whatever you made on that $5, you just compound that onto your next 5% trade, period. That's all you do. And
100%.
Just to give you some sort of an example, I've got a general practitioner here locally in my town. And I helped him. He started off in February. The old man took 50,000 Rand, and we were only given him advice on Bitcoin, all right? We turned, and that's without leverage. He only did it on his Luno account. It's silly. It's the funniest thing ever. All right. He turned 50,000 Rand into 250,000 Rand just by taking good advice. He just bought in just before the Elon pump, to be honest with you, because we all knew during January something big is going to come down, because PayPal went. Square came abroad, everybody came on board. And as I'm saying, I mean, he turned 50,000 Rand into 250,000 Rand just by spot trading on Luno. And you can't short on Luno. And just to show you what is the immense strength of compounding your profits, I written a syllabus in my Discord where I presented compounding where the guy starts off with $500. His very, very first trade is not more than $5. And he sticks to a specific trade size throughout the whole day, all right? But you have to be able to make at least 60% for that day against his trade size, all right? But then you only compound like 40% the next day. So if he started off with $5 today and he made like 60%, that's about $3. So tomorrow, he will take 40% of his $3. So the next day's trade size is going to be about $6.50 or about $7. And he just carries on. But the whole syllabus, the whole system works like that. Within 25 to 32 trading days, successful trading days, the chap can actually start to withdraw $1,000 a day. I've got on my Discord, I think 13 different people all around the world who left their jobs just because of compounding. You understand? And it is genuinely as simple as it is. To all you new guys, learn a strategy, stick to it, go backtest it. Don't put money on it, paper trade it. So as soon as you started to backtest it and you see that the strategy is actually working for you, start in the morning early, switch on your PC, tell yourself, will I take this trade or not? This is my rules. Paper trade. Write down the numbers. Tonight when you're back at home, see, was it a successful trade or not? Do that 100 times over. It'll take you 3 months, 4 months, 6 months. Do that before you put a single penny on a trade from there.
I
and
think
as soon
people
as
don't
you
even
have the
do that
confidence,
often enough.
yes,
It's just a
and as
practice
soon as
trade. So
have
you
the
write it on
confidence,
paper and you go in, you can even do it on your trading view. You can set up the trade and just see how it would have played out.
Correct.
100%, 100%, and then you start to compound. And I'm telling you, compound it's a miracle. It's immense what it can do for your portfolio.
Absolutely. And you know what other investment can you, I mean, if you put your money in a bank and also, listen, hey, not a financial advisor, blah, blah, do your own research. But if you put your money in a bank, you're getting what? 0. Whatever percentage interest per year. Whereas if you just doing spot buys, you can get 100% profit if the price pumps at the right point.
But
and your
crypto is so
illustrations
nice. I mean, it makes everything so available to us to trade, all the
absolutely.
time. I mean, even the
Guys,
money market.
stay away from scams, please. Yeah, I can talk about this for another couple of hours.
I also lost money to scams. It's
lost
not a
money.
nice thing. It takes a long time to emotionally get through.
Stick to reputable exchanges, and these guys that say that put your money in this platform, you can get 3% a day, 10% a day. Bly weg. And for non-South Africans looking at this, stay away.
Basically, just trust your family. Don't trust anyone outside of the circle because, got your backs. But yeah, thanks, awesome. Sean. I think, you taught us so much. Yeah, I'm very, very excited to actually go use these things in my trading. Thank you.
Awesome. And it helped, talking about it actually, and that's one of the reasons why I do videos, because it solidifies the knowledge that I've learned and makes me go and look at the things that I'm doing and making sure that I'm doing them right. And by repeating them, you get better and better. And as Werner says, if you're going to go paper trade something on TradingView 100 times, by the time you finished with that 100 times, your charting skills are going to be way, way above where you started. And your learning in that time period, it might take you a month to do, it might take you 3 months to do, but your learning is going to increase. And that knowledge is what we need to increase as traders on every single day.
That's also, where the bonuses can be nice. You're trading with bonuses and there's no risk involved at the beginning. And I think, why don't we do more paper trades, It's like, as humans, we're kind of this in or out kind of thing. It's like, if we don't have money down, then we don't really care what would have happened. But that back testing, I mean, I know Vanna told me he back tests. I mean, geez, I've seen some of the stats. You can back test one strategy, very strict rules, 1,000 times. Then you can know the profitability, if it's 80% profitable or 60% profitable.
Absolutely. And there's I'll leave you with this one thought. I like to look at videos on institutional traders because we need to think like the whales think, not like retail traders. And there's a guy called VWAP Trader One. He's on Twitter, and he's an ex-institutional trader. And his catchphrase on his Twitter account is that we're all one trade away from humility. So be careful if you get a couple of wins that you become arrogant and you think, oh man, I'm going to trade 100% of my portfolio on this, and all of a sudden the market reverses against you. So always be humble.
That's actually happened, I think, to a lot of people lately with this dip. I think a lot of people, when things were looking nice and things were getting euphoric, and a bunch of us were starting to think, oh, and this is where we need to take profits. I think a lot of people were caught up in that euphoria, obviously opening longs and stuff like that. Yeah, so just keep an eye on the charts. I mean, in the long term, the idea is to just buy and accumulate. Like, even in these dips, if you're buying for the long term, if you have money to invest, think about what you want to invest in. Think about the different amounts, how you want to allocate that. And if you listen, to all of our profit planning, and having people on the stream, like Vanna telling you advice that he's, been using for 15 years. It's taken him so long to figure out. Yeah, I think as long as you hear that conscience, that voice in your head saying, don't make the trade, you don't know enough, you might lose your money, or feeling like, I know what I'm doing, there are enough signals for me to go this way. And we are going to do a workshop. I'm going to look at how we're going to do it. But basically, we're going to do a longer, maybe like a 6 to 8 hour workshop for a few days where people can actually, get into it themselves. We'll take you through, how to open the trades, how to close them, and get you into that, like, that pattern, that profit-making pattern, and that's obviously where the compounding can come into play.
You know what? You can think your strategies are the best strategies, but you can learn from other traders, and guys like Anna and a lot of the guys, I think Carl's in our group uses that swing failure pattern.
Yeah, but he's got some
we can learn
strategy
from each other. Very, very important to learn from other traders.
I mean, since I started this group, I can't tell you. I think my learning has doubled, and it's been 3 months. I've been trading for 2 years or whatever, and since just we had a group going, we had a channel. There's only 5 of us, very close guys sharing information, and we still have it like inside. But the value that just comes from the community, from everyone's different ideas, and being able to not feel bad about just dropping a comment like, this is a thought that I have, no one's going to come and hate on you for saying something silly or whatever. It's just like, it's so valuable when all of those thoughts are put into the pool, and even the polls and things, who's feeling bullish, who's feeling bearish. It's a great thing. So
what I love about it as well, I know we're going on a little bit longer, but what I love about it as well, I wish I had a community like this when I first started trading, because a lot of the questions that I had would have been answered correctly.
I was all alone as well in leverage.
Some of the groups that you go into, you ask questions, and guys like, send me a WhatsApp, I'll help you turn 0.5 BTC into 3 BTC if you send this amount. Oh my goodness. So at least we know we've got a community that we can trust.
Yeah, I mean, I was literally listening to the moon, the moon and crypto rover and BitBoy, and it takes a lot more real. Over time, you find the realistic stuff, and the community
100%.
Is honestly the main thing. And so thankful to Vanna for just taking the time. I mean, he doesn't need to be here speaking to the noobs. So thanks you, Vanna. We appreciate it, man.
It's only a pleasure. I want to give a bit back to you guys, if you don't mind me crashing the gate again. I want to open my Discord for free to everybody in the Bybit group as from next week. I'm just busy with the permission settings to get everything going, and then I will open it up for everybody so that we have a community. I don't want to gate crash you guys, Jordan. So don't get me wrong. I don't trade a lot on Bybit myself, and that's the one reason. And people tend to be cautious of what they try to say on an official platform like the Bybit SA group, for example. But if they all jump onto Trader Giants, they can talk about their girlfriends and their boyfriends and whatever the case might be. But we can share a lot of knowledge in there, and then we can take it from there. Maybe something nice will happen from there also. So if I can get the consent from you, Jordan, then next week I will start up the permissions, and then we can take it from there.
I mean, it's all connected. Bybit also has a Discord, and obviously Bybit doesn't want, they're not like, okay, you must only trade on Bybit. There are different platforms for different things. I use Bybit for my 100x trades. I can't do a 300x trade on Bybit. So if I want to do that, I have to go elsewhere. And I mean, yeah, the idea, it's very simple. Basically, anything that's good for the community, we'll definitely support. And I mean, sure, what you're opening up to us up to there is basically, sure. I mean, your Discord is a paid Discord, so yeah, that's amazing. Thank you.
Vanner, I'm in, brother.
This one will just be a South African Discord, because I actually resigned my international liabilities and responsibilities last week, because I'm thinking about starting to coach people in the Bybit group who wants to do high leverage trading. But this is just a stepping stone for it. So people can start to ask questions in the Discord. And people like Sean, for example, and Jordan and Carls and everybody like that, they can come and give their 2 cents every day. It doesn't matter. It's not going to be my Discord solely, but it'll be a small group to start with. But then we can take it from there, And even if you guys want to do some live trading, you can just jump onto the Discord, and you can just open up your screens and switch on your mics, and it's a lekker community, you can just carry on there. All right. Okay.
Awesome.
So I will do it somewhere next week. We will have a chat, Jordan and I, and then we take it from there.
Cool. Wonderful.
Awesome,
Thanks,
guys.
man.
Thanks for joining us, everybody. Hope you got some value out of it.
All right, guys. Thank you so much.
Okay, James. Keep well.
All right.
Guys,
Chat soon.
have a good one.
Trade well.
Profitable
Cheers,
trading
guys.
to you.
Bye.